Number 5 misconception. Should I close old credit cards to improve my score? So here's the credit card question. I hear this a lot too. Should I close? And I've had people do it. I closed my credit card, so I think my credit should be great now. Hold on. Not necessarily.
Yeah.
Credit cards are both good and bad. So kind of explain the credit card situation.
Yeah. So credit, people feel like they're going to have great credit if they aren't using their credit. Where it's like, yeah, I don't have any credit card debt. I don't have a car loan. Like, I'm going to have great, my profile is going to look amazing. And you have to use credit to have good credit.
Right.
And so
that's why they call it a credit score,
yeah.
right? I don't have credit. No, I don't use credit score. It's a credit score.
I use my credit responsibly.
Right.
And so there are things that come into play with everyone's credit. And credit is tricky. Credit scores are tricky because they're different for everyone. A credit pull is going to affect Micah differently than it's going to affect me. It's going to affect your spouse differently than it's going to affect you, which is really interesting when you're co-borrowers. It's like, oh, I didn't realize it was going to hit us differently. Length of open accounts matters. Like your average length of your accounts being open matters. So if you have this card that you got when you were 18, just leave it, but you don't use it anymore. You don't even know where the card is. Keep it open because it's going to help your average length of accounts. And you'll get people that are like, well, I just opened up this, and this because I wanted to have a higher credit like available to me. So I am showing like a smaller utilization. When you open up those accounts, it kills your average. So your average now is shortened. Again, for someone with a 20-year history, it's going to affect them less than someone with a 3-year history. If you have a 3-year history and you just opened up a new card, it's going to hit you hard. If you have a 20-year history and you open up a new card, probably not going to do a ton. Like do very much to you. So it's understanding your own personal credit profile because it's different than anyone else's.
So if you're thinking about cleaning up your credit, first talk to a credit expert. Talk to the lender and just get the information first before you decide to open, close, pay off, pay down, different things with these credit cards. And I hear maybe another misconception you can clear up on this one. I heard with credit cards, you want to kind of keep a 30% balance in the credit card. Keep it there. Don't necessarily pay it all off and don't take it to the max, but kind of keep something in there to build credit better.
So just don't ever use more than 30%. Ideally, like I said, you're using and paying off every single month.
So that actually works better if you pay the whole thing off than keeping a balance in there?
Yeah, I wouldn't ever because you keep a balance, you pay interest. So, but on your monthly utilization, again, say you have a $100 limit, don't ever use more than $30. And so that's also a common one where people, you have access to credit increases. Like
real quick, when you say don't use 30%, can you use like 70%, but then pay it down to 30% that first monthly payment?
You can.
Is that a good idea, or just keep it right at the 30? Don't ever get to the max.
Ideally,
if you're going to pay it down.
Ideally, you're never using more than 30% of your credit, like available credit. Which is why. So sometimes what's helpful is if you have a credit card, a lot of people are eligible for limit increases. And people are like, well, I don't want to increase my limit because then that just makes me nervous because what if I'm using it? And it's like, well, just increase it, but don't use it. Because again, so ideally you're never using more than 30% of your credit. And so if you have a $100 limit, but you're eligible for a $1,000 limit, guess what? Now your utilization is $300 versus that $30, all on the same card. It's still going to look like a 30% utilization. But your available credit was just increased. So that's more what, if you are needing to utilize more than 30% of what your available credit is, look at increasing your credit amount versus going over that 30% of usage. Because over 30%, you get hit harder. Where it's like, just get yourself more credit available.
Yeah, and then with credits, you do the soft pull, you look at their credit, and say the credit's not looking the greatest. We need to work on this. Do you have steps or programs you can recommend to the borrower to help them bring that credit? Is there like a program you can put them on, or refer them to someone to help them bring that down?
Yeah, so we partner with, and by partner, I don't get paid on it. We've done our research with credit repair companies, a lot of them can be very expensive. There's someone that we've found that his pricing is really affordable. He does a soft pull at the beginning and will do a personalized video for you, and even at that where it gives you suggestions, and it's either, yeah, you're eligible for this whole credit repair program, or, based on what we're seeing, if you did this, this, and this, it's going to help you improve. And so, again, we can refer you to that person because it is, again, I'm not a credit expert. We actually are having someone come in and do a CE course on credit for agents because I think it's important because credit's wonky.
It's a whole different.
Well, it's a whole different beast, and everyone's credit is affected differently. But the bulk of it is make your payments. Late payments really hurt you, especially in 90-day late. Don't ever go 90-day late. They really they hurt you more than anything else. Well, not more than anything else, but a lot. They hurt you a lot, especially on an installment loan like a car payment or a house payment. A 90-day late is going to affect you. But again, utilization, use less. And again, if you need to use more, try and get an increase on cards you already have versus going and opening up more cards.
What about credit that's been paid off, like a car loan? Mm-hmm. I've had a 5-6 year car loan and I paid it off. Do you go back in history and look at that car loan, or how does that?
It will show as a closed account, so It's not going to necessarily factor into your today credit score.
But it won't hurt it either because it's closed out.
Yeah, because it's closed.
Okay, perfect. So that's credit card misconceptions, and there's probably quite a bit of that we could.
Yeah, that's well, and I'm like, yeah, you could pull in a full credit expert and talk about it, and it's still because. Again, we'll get people and they're like, well, I just did my credit. I just looked on Credit Karma or a lot of people's credit cards on their apps let you do a FICO score.
Yeah.
They're like, this is what my credit score is. Mortgage looks at a different score.
It's different algorithms, right?
Yeah.
So if you're looking at a car loan versus, RC Willey furniture credit versus a mortgage credit, they're going to look at completely different algorithms to qualify you.
Yep. So they run 3 credit bureaus. They run Experian, Equifax, and TransUnion. And it's ran off of, I think, FICO 2 or 4, which is just different than what you're seeing online.
Yeah, that's good. That's another, I guess, misconception as well. We could have covered the FICO scores.
Yep.
But again, if you got credit issues, give us a call. Reach out to us. We'll put you in the right direction.
Well, and again, 620 is kind of going to be your baseline. If your credit score is lower than 620, you probably need help. Getting you to a point where you're going to be eligible. And
depending on everyone's situation, too, that help could come real quick. We could clean it up real quick, or it might take a few months to get it done.
We had someone that was in, I think they're taking the middle average score, sorry. So, like, you have these 3 scores. This one, say, is 700. This one's 710. This one's 705. Your score is 705.
And if there's multiple borrowers,
you'll take the
middle of the lowest.
Yep. And so we had one, and his middle score was 6 something, like lower 6s. And by the time they purchased, we were at an eligible point, which was 6 to 8 weeks.
Yeah, so it can be done quick. Yeah, and depending on everyone's situation, depending on what your credit's looking like. But
yeah, absolutely.
Everyone can be cleaned up. First of all, it can be cleaned up. But it's how fast we can get that done depends on your situation.
Yeah, if you have a lot of late payments, that a lot of times is just time. You're going to need time to separate yourself from those late payments.
So that you're better now.
Yeah, and that doesn't mean that it's going to take a year. It just sometimes takes more time than someone that is using 50% of their credit card. So it's just going to be different.
Every situation is different.
Yep.
All right. So that was number 5 misconception. Let's go to number 6 here.